Hello class, welcome to B Grade Economics. This is Nate, your class leader. Let's get started. All right, so we just made a trade today, sometime this morning around 10 a.m., and it was in the silver market. Now, I've been short-term bearish as I think that there's consolidation going on in the silver market. However, I am long-term very bullish. I think that the opportunity in silver is excellent. I think a lot of the macro events, including the current inflation crisis, well, it's not a crisis yet. It will be soon, I'm sure. Right now, the narrative is that we will eventually correct. But one thing I want to cover about how I'm taking this trade is an opportunity presented itself, and we're going to take it for now, and we can reverse it if we decide that this is not the route we want to go. But we took a trade in SLV, that is a silver ETF. I do not recommend people purchase silver through SLV ETF. Purchase the PSLV ETF. That's the physical silver ETF. This is a paper market silver, and it has more risk than you get with PSLV. But that aside, the SLV allows options trading, and that's what we're looking for is for this momentum. So I am not trading this to hold silver. I'm trading this for the dollars that I'm going to get, and then I can convert those into silver if I want to. In this case, it's part of our 2x trade. So we're going to cover our 2x trade opportunity here. The stock price current at the time of the purchase was $22.36, and we bought 26 call option contracts. It was a buy call for 26 contracts for 100 shares, so 2,600 shares, for a total cost of $1,950, so almost the max of our entire account. Now, I went all in one go because either the opportunity plays out the way I think it's going to with a little bit of consolidation and then a launch, or we're just going to cut it out because the momentum is dead. So we're going to take a look at what the skew is here. And when we go down to what we're looking at for our opportunity, you can see that our 100% return line is around $24. So very quickly, it's around $23.90 at first, which this is not going to happen overnight. In most cases, it's very unlikely. But the very likely scenario is that we get near the $24 mark sometime near December. So if we can make that happen, we might get our 100%. I think this trade might turn out a little short. That's fine. Making 50% return is still excellent because I can use a stop loss and avoid missing a massive amount. So we're going to trade with around 35% loss range. And as you can see down here, that's trailing along these prices throughout. So I apply this obviously to our chart as we did previously with the QQQ, and you can see the curve. The curve is not too drastic, but to get 100% by the end of November, we need to achieve, let me see, by 14 November, so by the end of this week, or by the beginning of next week, we would need a $24 price, right? So it's a little high. And again, we need a slightly higher than $24 price to get 100%. So we see that the 100% might be a little hard to achieve here, but the cost premium on these options is very low, which means that we have a big opportunity to stack. And sure enough, we're up 6% total in the account. We beat the S&P 500 in a day. Look at that. So when we look at where, let's say 50% return is, that's not too bad. 23, 23, it's along the 23 line. We can make it to 23 from where we're at, and I'll show you on the chart what I'm looking at here. So what I did is I overlaid all the previous moves in this past year and a half bull market from the second move. So we see how there's this bottom, and then a move, a correction, and a second move. There's things like Elliott wave we can take into consideration where it's 1, 2, 3, 4, 5 move, however you want to see it. But we're just going to take a simple, I took a projection of all of them. Now this one's a really promising one. And silver has been suppressed a lot in an environment where inflation is a big narrative. So eventually people are going to start looking at silver. And so this can't last forever. It really can't. This is very undervalued compared to other assets at this point in time. And so the opportunity looks better here. I don't personally think you're ever going to see below $20 for actual silver ever again. That's just my belief, but I think I have enough support on the function of how silver market works to say that that's a probably reasonable answer unless we have a massive deflationary event. Now, what's our bottom line? Well, we broke this resistance line and turned it into support. pretty quickly. We have the momentum indicator here. This is the MACD. It's a moving average trend. I can do a whole video on this. It's excellent. It's fun to use, but it's very easy as a momentum indicator to identify when the blue line crosses over the yellow line, you're in the positive momentum. It's that simple to use. We take this little cross line here, and look, this is where the momentum was indicated. Now you didn't catch the bottom using the MACD, right? So that's a negative with it, is it doesn't help you find the bottom. It helps you find when momentum is shifted. And so we rode the momentum here, got the first wave in, crossed, and then said, nope, we're going to stay bullish. And if I go to the 4 hour, we're still looking good even on the shorter term, right? The twist is confirmed. And this twist start this morning was, or yet on Sunday, was what told me, okay, I need to get into this space again. Let's try to ride this out. You look at the shorter term, like 2 hours, we're coming close, but you see that we have times where we test with close connections all the time, so that's not really a concern to us on our trade. Now, I think that there's a possibility we stay under $23. Why did I take this trade? If we even touch $23, you make 50% profit. And we had a very low premium on these calls. So, our worst case scenario, we lose a little bit. We're going to cut it off at a 30% loss. What's our 30% loss line? It's right here. It's this red line. We have a lot of range of volatility here. The premium on these options was low, right? So I've been paying attention to this market. I've been looking for the opportunity. And when you buy macro asset options, they're very inexpensive compared to individual asset options. Like you look at options in the cost of options in AMC theaters has a bit of a mania behind it. So the options are expensive. Nobody's really interested in silver right now. And this is when markets tend to flip, is when people are not interested in them. When only the long-term holders are still there. Because then there's nothing but upside from when everybody's capitulated. So this may have been capitulation. It may go sideways, but our opportunity here with the overlay of these second jump moves shows that we can, every single one of these would hit $24, including the most bearish one right here, right? So if we come close, we stand to make more than 50%. This could get us to where we're looking for. And there's an opportunity to get up to here. Now, with the call option, it's set for 31 December, right? So I ended these at 31 December. This is our 35% loss line. This is our 100% gain line, right? So it doesn't take much to make 100% in this call option. It had a low cost on the premiums of the options. We have a lot of support here. This is the lowest it's been in a year and a half. And the market is showing all the fundamental indicators that this may be the bottom. Now, I expect there's a possibility there's another bottom here, and that's why I have this stop loss here. If I thought this was the bottom, and that we were never going to come below here again, I wouldn't worry too much about the stop loss. Because I think that the silver market has a tendency to be manipulated to the downside by short sellers, short traders, puts, and the paper market like SLV, there's a chance that we get cut off really fast and we get some quick liquidity to the downside. And I've been watching this all year, and this is what happens. Usually on Mondays, we get a lot of liquidity to the downside. You get big bears running through, and it just gets crushed. But eventually, that can't last forever. Eventually, the supply runs low, and the price has to climb, or it disconnects from the reality. So I think that the opportunity here for 100% return is possible. 50% return, very, very likely. A 35% downside with our stop loss is our worst case scenario. I think that this is a good risk reward ratio. Tell me what you think in the comments below. We're going to take this trade and ride it into see if we can make it to 100. Maybe this will complete our second trade. If we have a loss, we can use it as a learning lesson and talk about, because one thing I don't like is how late I took this trade. I would have rather have gotten in here as soon as we broke it down here. I kind of was hesitant due to my belief that we were going to continue to get a chop. But as I saw this change on Sunday, I said, no, we're going to take the trade. Worst case scenario, we got cut out. We learn a lesson, right? So thanks for watching. I'll see you again. Leave comments down below on what you think our next trade should be. Was this a good move or was it not? Thank you very much.